This blog post provides a detailed overview of Goods and Services Tax (GST) in India, explaining its components, registration requirements, and filing processes, aimed at consumers and entrepreneurs alike. In this blog post, we will explore the basics of Goods and Services Tax (GST) in India. GST has been a significant reform in the Indian taxation system, aimed at simplifying the tax structure. We will cover what GST is, its components, registration requirements, and the forms associated with it. What is GST? GST stands for Goods and Services Tax. It is a comprehensive tax levied on the supply of goods and services in India. Before the introduction of GST, the Indian tax system was complex, with multiple taxes such as excise duty, service tax, and customs duty. The government introduced GST to streamline these taxes into a single tax structure, promoting the idea of one nation, one tax. Components of GST. GST consists of three main components. CGST, Central Goods and Services Tax. This is the tax collected by the central government on intrastate sales. SGST, State Goods and Services Tax. This is the tax collected by the state government on intrastate sales. IGST, Integrated Goods and Services Tax. This is applicable for interstate sales, where the tax is collected by the central government and then distributed to the respective states. Example of GST application. For instance, if a service provider in Maharashtra sells a service worth 100 rupees, they would charge 9% CGST, 9 rupees, 9% SGST, 9 rupees. Thus, the total tax collected would be 18 rupees, split equally between the central and state governments. In contrast, if the same service is sold to a customer in Delhi, IGST would be charged at 18%, 18 rupees, since it is an interstate transaction. Registration requirements for GST. Not every individual or business is required to register for GST. The registration is mandatory if the turnover exceeds 40 lakhs rupees for goods. Any business selling online must register regardless of turnover. However, businesses can also opt for voluntary registration under GST, even if their turnover is below the threshold. Filing GST returns. Businesses must file GST returns to report their sales and tax liabilities. The two primary forms are GSTR1. This form is used to report the details of sales and services provided. For example, if a business sells goods worth 10 lakhs in a month, they must report this in GSTR1. GSTR3B. This form is used to calculate the tax liability. It accounts for the GST collected from customers and the GST paid on purchases, allowing businesses to pay only the net amount to the government. Example of filing GST returns. If a business sells goods for 100 rupees and collects 18 rupees as GST, but also paid 8 rupees GST on purchases, the net payable to the government would be GST collected, 18 rupees. GST paid, 8 rupees. Net payable, 18 minus 8 equals 10 rupees. Businesses must file these returns by the 20th of the following month. Conclusion. Understanding GST is crucial for consumers and entrepreneurs alike. It simplifies the tax structure and ensures compliance with tax regulations. By knowing the components, registration requirements, and filing processes, individuals can navigate the GST landscape more effectively. This knowledge not only helps in compliance but also empowers consumers to make informed decisions in their transactions. As we continue to explore the intricacies of GST, it is essential to stay updated with any changes in regulations and practices. This foundational understanding will serve as a stepping stone for deeper insights into the world of taxation in India.